Canada's housing market continues to struggle in 2025, and analysts are projecting difficult conditions ahead. Welcome to Wake Up Canada News. I'm Brad Wilder. Canada's housing market has faced significant challenges this year. A trade war disrupted what had been an early recovery in demand for existing homes, driving transactions to typical lows this spring and pushing down property values, particularly in Ontario and British Columbia. The January outlook anticipated that interest rate cuts would spur activity and push prices slightly higher in 2025. However, market conditions have been weaker than expected. Projected home resales will decline 3.5% in Canada to 467,100 units this year, with the first half seeing 4.1% pullback, largely concentrated in Ontario and British Columbia. The 5-year fixed mortgage rates will gradually increase to a long-term rate of 5.5%. The variable rate mortgages tied to the policy rate will remain more attractive to most homebuyers. Canada's housing market continues to struggle in 2025, and analysts, they're still projecting difficult conditions ahead despite some signs of stabilization. The market has experienced significant declines across multiple indicators, though new residential construction remains a notable exception to the broader weakness. Sharp population growth slows down impact demand, immigration policy shifts, and dramatically affects the housing market. This change represents a continued elevated population growth experienced like 2022 through 2024. The combination of stretched affordability, policy changes, and economic pressure has created a challenging environment for homeowners and potential buyers. While some improvement has occurred over the past year due to price declines and moderating interest rates, affordability remains highly stretched for many Canadians. Sharp population growth impacts demand. Real residential investment has declined 11% on an annualized basis in the first quarter, with much of this decrease attributed to ownership transfer costs. Existing home sales fell sharply through April, and despite some recovery in May, they remain historically subdued. Renovation activity has remained flat for several quarters and sits at 23% below its 2021 peak. The Canada Mortgage and Housing Corporation recently warned about significant declines in condominium sales in Toronto and Vancouver, with 55% of pre-construction units in Toronto remaining unsold in the first quarter. Now, this has created challenges for developers seeking project financing and led to sharp increases in months of supply for pre-construction condominiums. Despite current market conditions, consumer confidence in the future price gains has rebounded in recent weeks and, now sits at yearly averages, suggesting some optimism remains among potential buyers. Price cuts are likely coming to the housing market. The number of new single-family homes for sale jumped to 511,000 in June, the highest seen since October of 2007. Since the 2020 low, the number of new homes on the market has risen by 230,000, or 82%. Excluding the 2006 housing bubble, which peaked at 572,000, this is the largest supply of new homes in history. Meanwhile, new single-family homes in the South have risen to a record 312,000. This is far above the 291,000 seen in 2006, just a year before the housing market crash began. With supply near record highs, price cuts seem now unavoidable. Please like, share, and follow us on any of your favorite socials, including Facebook, YouTube, Rumble, X, BitChute, and our website at wakeupcanadanews.com. Till next time, remember that you're the voice, and it's time to make it count. I'm Brad Wilder. I'll see you soon.